What's up, everybody? This is Dave with Moneyology. Hope everyone is having a wonderful weekend. This is the uranium review for April 7, 2019. I'm going to do something different this time around. And whereas before I would take a look at the uranium sector underlying securities from a weekly perspective to remove some of the short-term noise in the market to understand where the trend is, I want to do something further. I want to take a look at a monthly perspective. So multi-year perspective to really identify how to get a better idea of what the market's doing longer term and to really identify the primary trend. And I want to show you charts that are completely clean and without any markups and kind of show you what I look at. And hopefully at the end of this video you'll be a little bit closer to viewing the markets from the perspective that I do that helped me in my trading, and hopefully will do so in yours. So let's start off first with the URA, which is the best well-known uranium ETF. I know it doesn't include a lot of these minor components that will be covered in the video. This is primarily Cameco, BHP, but nonetheless, it gives you a pretty good sense of where the market's been over the last couple of years. Now, this particular chart is marked up, but the individual names will not be. So notice, since 2017, we've been in this bullish wedge downtrend, consolidating primarily between 10.5 and about 15, I would say. And it looks like we're on the verge of breaking higher there. And throughout this downtrend here, notice that momentum was actually building higher lows and higher highs. And that's what you typically want to see when you're consolidating and building this base that eventually you're going to break out from. And that's where we are today. I think we'll see a breakout in the coming weeks of this downtrend. We'll probably see a back test at some point, shake out a lot of longs, and then break out above this red line. And that's really where you're going to see 1,000% gains in some positions. I mean, that might be a slight exaggeration, but maybe not. I mean, if you look at the long-term moves, that's what you typically see in some of the names. Now, that's the importance of diversification. You don't want to be stuck in a name that doesn't move and then watch all the other names move. So anyway, here's ALX Uranium Corp. This one, I don't even look at the name before I look at the chart, and before I even look at the price action, I look at the momentum. What is momentum showing me? What it's showing me is that we're creating new lows in momentum. It frankly says I'm not interested. I can verify what's going on by looking at the PPO of the moving averages to see is the long-term moving average crossing over the short-term moving average, and if that's the case, then it's not a good sign. It says a downtrend is in full effect. Let's go through this way. Okay. Now, Anfield Energy, on the other hand, is a complete opposite. Notice that in 2018, basically, December of 2017, had a massive move, broke out above this 50 RSI marker. And what 50 RSI is really an indicator that momentum is in the bullish category. If it's below 50, it's still in the bearish category. Not overbought or not oversold, but when it breaks out above this, that's very important development. Now, very often you'll find an immediate breakout, and then you'll have a consolidation period to retest this RSI 50 mark from the upside. That's very bullish, and that's what you see here. We had a retest, we had a bullish flag. You notice there's like a flag here. We retested it, and then we rallied again to new highs. But what happened here? At 59 cents, RSI was not as high as when we hit a high of, let's say, 42 cents. That's negative divergence. And that, if you're long, is a sign that you want to start exiting your long position, at least in the short run. Sure enough, we broke down, and we broke below the 50 RSI, and that's why you saw this nasty move from 59 all the way to 17.5. But nonetheless, we didn't break far lower than the 50 RSI, and now we've consolidated here. And now that's when you start consolidating before the RSI, that's when you want to start getting interested, and that's when you want to look at weekly and daily perspectives. And sure enough, that's what we've done in previous videos. But now you see the moving averages are starting to converge to the positive direction, and momentum is starting to move in a positive direction. And sure enough, it broke above the 50 RSI marker. And typically when that happens on a monthly perspective, the moves are really, really nice. And now you want to see a strong close and follow through in the month. But this has the makings of a stock that, without knowing anything about its fundamentals, is poised to move considerably higher. I mean, we're talking 40 cents to 60 cents, possibly 80 cents are various different price point targets from on the Canadian exchange for this particular name. Obviously, if you want to invest more than a nominal amount, you want to do your due diligence on this one. I have not, but it's certainly an area that I'm going to start looking into as I have more time. API.CA Energy Corp. This one is another one, but unlike the URA, where it was consolidating at the lows, this one's consolidating at the highs, and that's what you want to see in an uptrend. However, notice here that despite the new highs that it's making in price, it seems like it cannot get above this breakdown point. So another area of RSI that's very important is where did price break down last time around before it went into a downtrend. And I can basically roughly point out to around this area is where price broke down, and from there we went from a high of close to 50 cents all the way down to a low of about 10 cents. It was right in here, and sure enough, if you draw and extend a line here, which I'm not going to do here, it coincides with this particular point, and that previous breakdown now serves as momentum resistance. Will it break out eventually? I think so, but that's why it's struggling here, and just practically speaking, there's a lot of supply. Every time we go to this area, people are selling. Every time you drop, people are buying. And so until it breaks above the supply and demand resistance zone, it's going to have this struggle. But I'm watching this closely, and this is something that you have to look at weekly, daily, and so on. Now, Blue Sky Uranium, this is one that we like a lot, and here's the reason why. Again, notice momentum is building new highs. Or higher lows rather, and again it's consolidating below the 50. That's very nice because that means that it's had a significant decline, in this case from 74 cents all the way to 10 cents, and yet it hasn't really broken down as it did over here in momentum, and that typically is a sign that you're going to see a breakout eventually. Now again, look at the volume, another indicator of here's a positive trend. People are buying over here, and it's kind of creating a rounded bottom, and sure enough, broke out this month so far above the 50, 18% gain. And although here is a breakdown point right there where we broke down from a previous high, you might see some resistance, which might coincide with this 50-month moving average around 27. But nonetheless, from where we are today at 19.5 to 27, that's a nice 30-40% gain even from these prices. So yes, there's going to be a lot of resistance here because there have been points of support before, but nonetheless, I think this eventually breaks much higher. And look at the PPO; it just closed the month slightly above positive, or not closed the month rather, but it's currently in a positive trajectory. That's very positive development there. Cameco. Cameco is not something that excites me, but from a trend perspective, it is. If you look at this chart, it's a massive bullish wedge triangle. Eventually, this breaks to the upside. Now, there's a lot of resistance. 50-month moving average here around 1169, 200-month moving average around 1331. So a lot of supply, but it is consolidating above 50 RSI. That's important. But you want it to keep moving higher, and then it's not, and it's frustrating. Notice this is a previous breakdown point right over here, so not coincidentally, this is where you're seeing a lot of the struggle. It needs to break above that. Then there's going to be another struggle around the 61 level right over here, where another major breakdown. So a lot of resistance here, but I think eventually it breaks higher. And in my humble opinion, I think this stock sees over $100 in the coming uranium bull. Don't know when it is, but I think it's around the corner. Canalaska Uranium, another one here that's consolidating below the 50, but above the previous lows, and that's very important. This is where we broke out right over here in 2016. This was the support zone, and so now we're consolidating right above that support zone in a bullish flag, and I think this is an area that you want to start looking at to add or initiate positions, and as it goes higher, builds momentum, you want to continue to add to those positions. Look at PPO moving in a positive trajectory, very important. Deep yellow, so this one also is in a bullish flag in RSI, but again, notice what happened here. At 32 cents, we hit a high of close to 90 on RSI, exceptionally overbought. We consolidated, we went back and we made new highs, but momentum did not mimic the previous momentum, and that's negative divergence. That's your indicator to get out, or certainly trim your position. And that's where we are today. I don't know enough about the fundamental story, but what I do know is that this point right here was the point at which we rallied substantially, and that's where we are today in terms of momentum. So I think we're going to find some support here, and after 3 months, negative months of price action right above the middle Bollinger Band, this is a great place to add. It's possible we break a bit lower and test this 50 RSI point, very possible, and that's where you add more. But it's definitely an interesting stock that you want to have on your radar. Denison Mines, also one of the I don't want to say it's a major, but certainly relative to some of these small names on the Canadian exchange, this is a major player, consolidating for a number of years here, but building higher lows in momentum, and now it's on the verge of breaking above that 50 RSI. I think it's going to have a move similar to what you'll see in a chart that I'll show you later of Urenergy URG. Very, very nice price action here, and I think eventually breaks above $1, and then look, there's a lot of blue sky here, unlike a lot of the other names that are pretty busy. Here's one of our favorites, Encore Energy Corp. This one here is just built a rounded base, and it's just moving to more rounded bases, and continues to build momentum to break higher. And notice that you have consistently new highs in RSI. That's very, very important. You broke out here above previous highs, and that's what you want to see. Guys, pardon my puppy interruption. Hang on 1 second. Got to get the puppy out of the room. All right. So one of the best momentum indicators are the ones that have RSI breaking to new all-time highs, far more important than price. And that's what we're seeing here, where we have positive divergence. We're just slightly above previous price highs, but momentum is significantly higher. And some of the biggest moves happen when you break above the 70 marker in RSI. We're talking, 100% moves. And so that's what I'm very excited about here. Now that we're breaking above this previous price highs, we've got the 50-month RSI consolidating and curling to move higher, and that's where I think you're going to see a really, really nice move at some point. Hopefully it's backed by positive news, but ultimately the technical picture looks very strong. Energy Fuels, another one of the larger names in this particular watch list, similar to Denison, similar to URG. Look at the rounded base, and now it's consolidated. That's kind of your cup and handle. Here's the cup, here's the handle, and right below the 50-month moving average. I pointed out on the weekly chart that this has been a nice bullish flag, and it's broken out to the upside. Notice again, momentum is built a positive divergence. Momentum here is higher on a monthly than it was when price was at 409. That's what you want to see. And so if you want a more, quote unquote, safer play, this is a name that you definitely want to be involved in. Gosh, I'm just so excited. There's so many great opportunities. Fission 3.0, this one we like, but from just a contrarian play. And again, here's why monthly charting is so crucial to understand. Because look what happened last time we rallied from 9 cents. We rallied right around here is where momentum was. So that's going to be your exceptionally strong support point. Now look what happens. We're back to this price point, and we're at a similar place in RSI, but slightly higher. That's making higher highs, and it's now previous breakout is now support, and now that's not a surprise why we're rallying here so far, up 15% this month. Wouldn't be surprised if we're up 100% this month, because moving from 9 cents to 15 cents is not a big move, but from a percentage standpoint it is. Notice that this is a bullish wedge, and when you have very strong volume on breakdowns, that suggests, and especially when you're in a bullish wedge consolidation pattern, especially when you're building higher highs in RSI on very high volume, that suggests that whoever wanted to get out got out, but someone is getting in here, and you don't ever want to see exceptionally high volume at new highs, and you definitely want to see exceptionally high volume at lows, because at highs, when there's massive volume, that means the big players are getting out, and vice versa when there's massive volume at lows, that means big players are getting in, and that's what you want to see, and that's what we have here so far. So this is just at the beginning of what I believe to be a very, very strong move. It might have the best upside potential from a technical standpoint of any chart on the watch list. Fission Uranium, another one that's in the mid-tier here, and it's just been consolidating at the lows for a long time, but if you look at it from a weekly standpoint, it looks like it's finally starting to break out higher. But from a monthly standpoint, notice here, it has not built new highs, or rather new lows, as many of the other names have. It's actually trying just to break out above previous lows, right where we broke down from about 59 cents, right around here. That's where we're trying to break out from, and that's going to be very challenging for it. So sure, can it run from 42 cents to 50 or 55? Absolutely, but there's going to be a considerable amount of resistance, and so it's not one of my favorite names from a technical standpoint. Forces Metals, this is another beauty. So look at the breakdown from 1020, right? So 1020 all the way to a low of 5 cents. But even as it broke down, the momentum started rallying right around here. Okay, so that was in 2017. We fell all the way here, and we rallied once. We tried to break that 50 level, which is going to serve as resistance. We fell lower. Tried it again. We fell lower. But notice here, the second time at 21 cents was positive divergence versus 28 cents. So lower price high, but equal area of momentum. That's positive divergence. But we broke lower, and that sometimes happens. Sometimes there's something fundamentally changing. We broke lower, but when you hit a first sign of positive momentum, it suggests that something is changing in the trend. Now we did hit lows there in RSI after failing to break out of momentum, and that's something that happens because why? You see a lot of traders, they notice that there is some consolidation, and they think, okay, now we're getting ready to move higher. They buy up here, waiting for the breakout, and it doesn't happen. There's a breakdown. They cut their losses right around here, and sure enough, that's why we get some of these washouts. But we didn't break down to new lows in momentum, and then we started to base again. And then we finally broke out above the 50, right over here. Massive move, and we haven't really looked back. Major move higher, and then we consolidate backtest. That's very important because this now serves as price first resistance, now serves as support, and that's where we went here, and that's where we started initiating our position right about here, because if this holds, that means that this wants to move to new highs. And look at this, you're right below the 50-month moving average, and the 200 is all the way above almost 150. So there's some considerable upside should this break above the 50, and I'd say the probability is close to 99% that it will. Obviously, I've got some bullish bias here, but I just love the look of this particular chart. Global Atomic Corp. Here's another one that's just built consolidation and new highs all above the 50 RSI. That's a very positive development. That means it's in a new bull uptrend. And once we broke out above that 50, that was your sign to really go long. And once we consolidated here and backtested successfully, that's your sign that this move is indeed legitimate. And I expect to see this at 75 cents, if not higher, at some point this year. Gold mining in this watch list because it has a major uranium optionality play. The chairman of gold mining is the CEO of UEC, so they definitely know a lot about uranium. They're in the Athabasca Basin, or however you pronounce it, and it's kind of like the mining triangle of uranium right now, and so. If uranium really picks off, they've said that they're going to spin off this particular mine. So this could be a really nice price increase for a gold mining company, but that has a uranium optionality. It's consolidated here for a little while, but it broke out from its downtrend, and that's very important. And momentum is starting to build, and so at some point it's going to rally, and it's going to rally hard. But right now it's showing a little bit of weakness, not the best play in the sector right now. GVX Uranium, this one is a great fundamental play based on a lot of the people I respect and admire on Twitter. And so they've been accumulating all around this area. And look at the volume. It's just been building very strongly. And it's been consolidating below the 50, but building a rounded base. We finally broke above the 50 on a monthly, and sure enough, the move is massive. And so there's tremendous upside here. If this can break above the 15 middle Bollinger Band, around 15.5, I mean, this can double, triple in a uranium just fear of missing out rally. ISO Energy, another name that just looks fantastic from a monthly perspective. Very clean. There's no just up and down volatility. There's no noise in the chart, and it's moving higher, building new highs in RSI, and now it's right at that 50 level. So if it can break, surge higher above that higher Bollinger Band, this can really move much higher very quickly. Laramide Resources, another one of these that smaller names but has a really good management team and has a really good just track record and a pretty good portfolio of assets. This one's just consolidating here around that 50 level, and it looks like it wants to break higher again. And based on a considerable amount of evidence from various time frames, this suggests that this triangular pennant pattern will break to the upside, and when it does, there's going to be a considerable amount of upside. But it's not the cleanest momentum chart, so the move to the upside probably won't be as high as, say, GVX or some other names that we've covered. Next Gen, another pretty large junior here, consolidating below the 50 after a multi-year downtrend. And if it breaks to the upside, this is going to be probably a double, if not higher. And the fundamental story picture is really nice here, and so I think the upside is great, and the downside to this particular name is much lower than a lot of these other more speculative names. Paladin Energy, this one is interesting. It just has this bullish flag on momentum, this bullish flag on price, but it's below the 50, and until it gets to above the 50, I don't trust it, and so it's below the middle Bollinger Band. I can see that this can have a very sharp move to the upside, so it might be worth taking a flyer on, but for me, it's not something I would touch while there's so many other better opportunities. Plateau Uranium, another one. Here's an interesting one. So notice here, this is last time we had a major rally from about 20 cents all the way to 127. It started a little earlier. It started all the way around 15, around here, but it built a new high when it made a major hammer on a monthly around here. So now we're kind of retesting that area, and so previous support is now current support. It's got a bullish wedge here, and so I think at some point it's going to break to the upside. Don't know if it happens right now. We need to see confirmation, but definitely like the pattern, and I like the support. If it can consolidate and curl higher, that's your sign. Obviously, you're going to miss when this happens. You're going to miss maybe the first 10-20% of the move, but you're going to catch the next 100% if you're lucky. Pure Point Uranium, another one of these that's consolidating higher, similar to Encore Energy, right below that 50 area. It's been consolidating, and then boom, broke out from a low of 6 all the way to 10.5. Now it's consolidating again. This bullish flag above the 50-month moving average. PPO is firmly above 0. Back tested the 50 and wants to move higher. I think this goes to 20 around that 18.5 cent zone sooner rather than later, and it's got tremendous upside from a technical perspective. There's a lot of blue sky here. Sky Harbor, another one of those juniors in the space that has a great management team and good asset under its belt. Consolidated here right below the 50-month moving average. Finally has broken out. It's been a great month here at 22%. Again, below the 50 RSI, but now it's breaking higher, and there's a lot of upside here, although there will be a lot of points of resistance, because when we broke down right over here, this is where I would expect a considerable amount of resistance. But in the meantime, this can rally from 32 cents in the USD all the way to 50 or 60 before that resistance is hit. UEXCF, another one that's been in the dumps for a while. with very sharp moves to the upside and then very sharp corrections to the downside. But notice, almost each time we've moved higher, we've built new highs. We had positive divergence at 31 cents versus when it went to 33 cents. Momentum was higher, but we broke down here, and it's been nasty. If you held from all the way here to 10 cents, you've suffered a lot. I can only imagine. But now we're consolidating around 10 cents, and now we're curling higher, and I think a move to the upside, certainly to test that 50-month moving average around 22 cents is definitely in the cards, and I think this probably breaks out eventually and moves towards that $50 range. So a lot of upside, a lot of blue sky ahead, but that's got some work to do. Ur-Energy, a couple more names on the list. This is the one very similar to Denison. It's been consolidating, rounded base pattern. Finally broke out, and notice it's built positive momentum. It's got new 52-week highs in momentum, and yet and price is not even as high today as it was when we were at 93. So it's kind of like a triple top in price, but momentum is hitting new highs. This tells me this is going to break out, and it's gonna have very nice gains to the upside. Uranium Energy, UEC, another one that's been just consolidating here for the longest time, but it's got a tremendous asset in the United States, and it's obviously waiting on that big decision that everyone's been talking about the U.S. national security, whether uranium, domestically produced uranium, is a risk or not. Rather, having to buy uranium from foreign countries is a risk. And so if the U.S. government under Rick Perry says that it does pose a security risk, that will create a massive upsurge in uranium, and that's what you want to see if you're especially a U.S. domestic price producer here. So anyway, again, consolidating right here above the previous rally point around the 69 cent zone. So we rallied here, and now we're consolidating. We kind of back tested, and now we're breaking back above the 50-month moving average and 50 RSI. So this can rally really strongly. Look at how it went last time from a low of 16 cents to a high of 7.48. You can see a similar move. I can see this at $10 or more if and when uranium does really pick up. Here's Western Uranium, another one that has very powerful moves. Look at this beautiful breakout here, and that's why we saw such a massive rally, but we broke down below the 50-month 50 RSI level, and sure enough, when that happens, the breakdown happens, that's when you're going to have massive price declines, and that's what we saw. But looking at shorter time frames, it suggested that 70 area was going to be a very strong support, and sure enough it was, and now we're curling back higher. So 50 may serve as resistance. We might see a consolidation here, but if it breaks above that 50 from a long-term perspective, this is a very, very nice technical buy. Finally on this list is Westwater Resources. This has been just a widowmaker for anybody who's owned this. Obviously management, at least previous management, I don't know if they've changed them. They certainly should have. They've just killed shareholders, but notice it's building momentum. It's basing right here, and if you look at the weekly, it looks like it wants to break higher. So this can really run simply because of how beaten down it's been. Just a relief rally could probably take it to 25 cents to 50 cents. And so this is a lithium play, this is a uranium play, cobalt. I believe it's cobalt, but in any event, a lot of upside technically on this play. I don't personally want to touch it because of just bad luck with this particular name and management, but for those speculators who want to drop a penny or two on this particular name, this might have some very nice upside. Anyways, guys, these are the type of videos I intend to make on a weekly basis. A couple of these, probably three such videos a month, or rather a week, and on various different sectors. And if you like these videos and appreciate my work, then I would appreciate if you could become a premium subscriber. We'll be launching our premium service around July. We've opened it up to 100 slots, and so now we've got 40 people, 40 fine folks who have already joined as individuals who want to be a part of the service. I appreciate that very much. If you want to be a part of it, please shoot us a note at dave@moneyology.com. Always appreciate it, and we'll send you the details as they come, and any feedback would be much appreciated. Please follow us on Twitter, StockTwits, and on YouTube at Moneyology. Thanks for watching and have a great day.